Good evening. Good morning, I should say. Well, it is evening in some places. It's still evening in the US. Welcome to my channel. Today, I would like to talk about market mentality. And it's quite a broad subject, but I want to just give you a hint at things and because stock markets go up and stock markets go down over the longer term. They you'll find they go up, so that's why a long term buy and hold of good quality companies, paying a dividend or not paying a dividend, but I'll talk about that in a future video. That is the way to go for me at buying and holding long term, and you'll see the results. Long term is at least 5-10 years or more. Okay, so now what happens with the stock market? Obviously, the stock market basically follows your earnings. So, in other words, when the companies are earning more, as the company's earnings increase, the stock market will increase. That's why the stock market increases over time, because you'll find most of the stocks will increase their earnings year after year after year. Um, some of them, because they're obviously if they don't pay dividends, then they reinvest for growth, or they do a bit of both. They reinvest for growth and pay dividends. Okay, but dividends is another subject. Okay, so if you had to compare this to a shop, let's just say, for example, when the market falls or starts falling and falls further, then people are fearful. Okay, so when people are fearful, they start selling their shares, and then that causes more selling, which makes the prices drop further. And that's how you get a market crash or a bear market, because everyone's selling. The clever people are waiting for opportunities, and then they start buying. Also, with that, when the price is falling, it's also difficult to catch the bottom. So that's why it's difficult to time the market. And that's why I also advise rand cost averaging or dollar cost averaging, because then you're buying equal amounts over the months. Obviously, you can invest more if the market is down, but if you try, I compare it to catching a falling knife. So in other words, if a knife falls off the table and you want to try and catch it, if you try and catch it, you can get cut, because the knife can cut you if it's a very sharp knife. The knife can actually cut you. So what I suggest is let the knife fall and then settle, stop bouncing around, and then you can safely pick it up. So that's a good analogy for buying shares. So in other words, good companies at cheaper prices is good. We had at the end of October, we had a situation where there was actually quite a few good companies, good tech companies, hit on good earnings. Good earnings. Meta was one, Microsoft was another, even Nvidia went down. They fell on. There was actually no reason for it. There was something to do with the report on Microsoft, and that saying some misunderstanding or something. But there were generally good results, and the price fell. Okay, then that is the that is the time when you see a great company like Microsoft um, fall like that, and then after it's fallen for a day or two, then you see, okay, then you start buying. It's definitely worth buying that. Okay, and then the other's also true. As the market is rising, like the American market is now, the market's rising. Some people are greedy, so they start buying, 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 buying. They start sometimes overpaying for shares, and I'll get to the price earnings just now, and then you can see. So they overpay for shares, and the price goes up and up and up. Then sometimes they get burned because they buy too high, and the price is way overvalued. But that's why it's good to do fundamental analysis. Look at the company's earnings, look at the cash flow, look at the predicted earnings and cash flow and balance sheet. Make sure they've got cash, the assets a lot more than the liabilities. Then you've got a very strong company, and obviously their earnings predictions, if they can grow into the future, then that's the companies to go for. So my analogy is if you go to, for example, the shops. Let's say, for example, the shop has a sale, huge sale, 25% off. Same product, 25% less only today. That shop will be, people will flock there. It'll be packed. Everyone's buying. Okay? But for example, a fantastic share that drops 25%, for example, I'm not sure how Microsoft fell. I think it was probably 10 or more percent. Okay? Since it has recovered, it's almost to where it was, before, sort of towards the end of October. But if the price falls like that, people buy. So, same thing is if a company announces, okay, we're gonna be selling, let's say jeans. These jeans, they're usually $100 or 100 Rand per pair of jeans. We're selling it for 150 Rand tomorrow only. People will be like, why? Why would we go and buy something that we can actually get for 100? Why would we buy more? But in the stock market, if something goes up, then they're like, oh, this is going up, we must buy it, and it carries going up. Some shares do keep going up and keep going up, but always keep your valuations in mind. In other words, if it's gone up and you still see value in the share, if you look at the price earnings, you look at the dividend yield, you look at everything, if you still see that company is valuable, then it's worth buying. For example, Tesla went up dramatically on the earnings. To me, it still looks like it's a good buy at these levels, and then it keeps going up. And I think it will keep going up into the future because you have to take your future growth into account. So always just check your valuations and stuff. And yeah, no, you have to make sure that you don't overpay, and then try and buy at fair value, or what you see as fair value. And if you hold on, if the stock market does fall 5%, 10%, you can just hold on. The other option is to accumulate. So if the market does drop a little bit back, which it can do, then use that to accumulate shares. But don't rush into accumulating. Just see how the price goes. Even if you think, okay, this is good, maybe wait a day and then see, okay, to make sure the price has stabilized at that levels. And yeah, you see the prices go up, and yeah. So that's my take on market mentality. And if you found this useful, please like and subscribe to my channel, and have a great day, and wonderful.